Good day. My name is James Campbell, Managing Director of Botswana Diamonds plc, a London AIM and Botswana Stock Exchange listed company. I'm delighted to be able to virtually present to you at the 2020 Africa Mining Summit, which this year, naturally, is a virtual event due to the COVID-19 pandemic. The stark reality is that there is a fraction of the junior diamond exploration activity than there was a dozen or so years ago. In Southern Africa, which produces about a third of the world's diamonds, there are only two currently actively publicly listed diamond explorers. This is a tragedy. We all believe in the enduring value of the natural diamond and what it means and what it stands for. And clearly, Southern Africa remains highly prospective. This presentation, which I'm about to give, describes the current situation and suggests what could possibly be done to remedy it. The title of my presentation is Attracting Funds to Develop Southern Africa's Diamond Exploration and Mining Potential. The outline of my talk is going to be the following. I'm going to firstly have a conversation about diamond industry fundamentals, and that's particularly topical during the COVID-19 pandemic times. I'm then going to touch on global exploration trends, developing diamond projects, accessing exploration capital, why Southern Africa, and then rounding off with a few conclusions and suggestions. So firstly, moving on to diamond industry fundamentals itself. Many people look at the headlines today and feel that it's a gloomy scenario. Diamonds need some best friends. There's a diamond crash. Just don't ask how bad it is. Worldwide diamond mining and sales plummet due to COVID-19. However, it is important to remember that diamonds actually are not a commodity. They symbolize lasting values such as love, which is fundamental to the human condition. It goes beyond engagements and weddings and celebrations of special occasions, and in fact is a long-term source of value in volatile times. Natural diamonds are authentic, traceable, and sustainable, and are appealing to millennials, especially when there is provenance and good governance and sustainability attached to it. Large and colored stones are especially in demand at the moment. And if one looks at history, one always sees that diamonds are probably one of the first to take a plunge in terms of natural price when there are harsh economic conditions, but then again, they rebound very, very strongly when conditions are strong. And in fact, a very good statistic, which I often use, is that Chai Tao Fook, a large Chinese retailer, has actually opened 50 stores since the opening of the Chinese economy following the major pandemic in Wuhan. We all believe the luxury market will also adapt to the new demands. Sales of luxury goods are set to fall, and consumption of luxury goods, however, are set to weather the crisis itself. Online purchases, which naturally are an important part in this pandemic, are set to increase. But like any business, the luxury goods business is profoundly transforming during these particularly challenging times. And the future market will depend on the luxury goods ability to be able to adapt and survive as we come out of this recession in probably what we're going to see is some kind of long gradational movement moving into the course of next year. The long-term supply demand in the diamond business does look good. Rough diamond supply is still yet to decline. Diamond, notwithstanding the current shock, are expected to rebound itself. And with the declining supply and increasing demand overall, and the lack of new discoveries coming into the market itself, there will be gradual increases in natural diamond price over time. So therefore, let's just kind of touch on some global exploration trends. Now we've actually given a bit of a picture of the diamond market. Global exploration budgets naturally, or perhaps not naturally, because one does, I believe, need to be counter-cyclical in these kind of times, have been slashed during the course of 2020 as businesses have actually sought to survive. We're looking at the lowest global exploration trend in 15 years. Junior debt financing is down 50%. However, there is continued merger and acquisition activity as a result of lower budgets and economies of scale. Many are forecasting a modest rebound for 2021. If one looks at the detail behind that exploration spend, you'll see that grassroots exploration spend has been further eroded, and most exploration work is either contiguous to mine sites itself or actually on the mines themselves. So little is being spent on grassroots exploration, and especially around new thinking around exploration and what could be the deposits of the future. If one looks at the regulatory compliance and the regulatory environment around it, there is continued onerous reporting requirements from the major stock exchange, and I've highlighted three here. The three major stock exchanges which juniors tend to belong to, the London AIM market, the Australian Stock Exchange, and the Toronto Stock Exchange. And many people view juniors who are listed having lesser reporting requirements and lesser ESG compliance requirements than majors. But actually nothing can be further from the truth, and juniors have to actually undergo the same level of regulatory rigor and ESG compliance as other people have to. But if you paint that picture and looking at what different countries are doing to attract the exploration dollar, Canada has a very famous flow-through share scheme, which has created an extensive exploration business in Canada and, in fact, the world for companies which are listed on the Canadian Stock Exchange. This provides investors with major tax rebates when they invest in junior companies. Australia has also followed suit in what they call the Junior Mineral Exploration Incentive, and Australia is rapidly becoming a destination of choice for explorers and juniors. South Africa launched the 12J scheme in 2009, and this was modeled very much on the British incentive scheme. However, and very, very sadly, it is a complex scheme, and no juniors or exploration companies have been able to participate in this and therefore get the tax incentives and generate local investment from South Africa to explore in South Africa. So moving on to development of diamond projects. Development of diamond projects is essentially an investment in risk reduction. If we start at the left-hand side of the slide, where we look at things such as mapping, exploration, and geophysics, going through to core drilling, large diameter drilling and bulk sampling, and following the SAMREC code and an exploration target or a deposit, moving into mineralization, pre-feasibility study and bankable feasibility study, and following that from a resource perspective, an inferred resource and an indicated resource. What I've also painted on this particular project is our Botswana Diamonds projects, starting at the exploration target and anomaly, where we have projects in Botswana, Sunland and Sekaka, Marangi in Zimbabwe, and then moving through to mineralization at Maibwe and Thorny River, and the recently acquired Sekaka Diamonds KX36, which has an inferred resource. Investors' appetite chiefly depends on chiefly depends on their degree of confidence, and some are focused on the lower end, where they have a very high risk appetite and they look for exploration success. Others, such as banks, look more at the right-hand side of things, where there is a great deal of certainty, dividend flow, bankable feasibility study, and indicated resource. The key differentiators here, which are particularly important, are the deep expertise in technology, an understanding of the deposit itself, and very, very importantly, access to funding, as without funding, none of this is possible. Just very briefly touching on a little bit more detail around Botswana Diamonds projects. Sikaka is focused on the bulk sampling of KX36. This is a kimberlite deep within the Kalahari Desert of Botswana and will require innovative thinking and innovative technology in order to actually commercialize it. Nearby to this, in Sunland Minerals properties, there are kimberlites waiting to be discovered. And a little bit further west of this in Maibwe, there's some very high interest kimberlites with abundant microdiamond content. In South Africa, we're looking at the Thorny River and Marsfontein project areas. And Marsfontein is almost unique in that it had a 3.5 day payback when the mine went into production. So what we're looking at here are small, very high grade kimberlites which are on the surface. And we are working with 2 technology providers, one in Canada and one in the UK, who have very innovative approaches to this form of technology. Moving on to a little bit around funding and where different investors come in at different stage. This gives the standard J-curve, as it's often called, in the mineral exploration environment. At the very beginning, you typically have friends and family, and as my chairman would say, the 3 Fs, friends, family, and fools, who actually invest in companies when they're an idea. They develop into a prospecting license. They start to do some drilling. They start to ramp up their value quite quickly. Other investors start to come in, such as smaller funds. And once you start to develop a resource, particularly when you actually get to an indicated resource, this is where debt financing and banks come in. If I give a small kind of snapshot of a success story in this environment, and people need to hear these success stories, as this is not just theory. This is the AK6, or as it's now known today, the Karowe mine. The Karowe mine was initially discovered and developed by African Diamonds PLC in joint venture with De Beers, and then Lucara Diamond Corporation bought out African Diamonds. The important point here is that the early stage investors in African Diamonds, when this was just a project, an exploration target, if they can maintain their investment, would have made 10 times their money, and if they had just stayed with their initial investment, would have made 25 times their money. This mine is still producing dividends for shareholders at the moment. So how does one access exploration capital? Well, there are many traditional sources of funds like equity funding and debt funding. And if one looks at equity funding, there is the public markets through the various stock exchanges, and there is private equity itself. This is becoming more and more challenging, particularly because of the regulatory environment, and particularly because of the lack of risk appetite in investing in exploration. Then there is debt financing, and that's typically focused on companies which have an indicated resource, and more particularly in terms of those which have a bankable feasibility study. There are also alternative sources of funding which are coming gradually on stream. There are production-based sources of funding such as royalties and streaming arrangements, and Canada and to some extent the UK have now started to look at online financing such as crowdfunding and getting a lot of popular support for investing in a particular area from a vast array of investors. Canada's led the way on this, and if investors are interested, Cornish Lithium has just raised quite a large amount of money using crowdfunding for their project in Cornwall, and I would imagine it would be chiefly from Cornish people. If one looks at the main stock exchanges where one does raise these money, you have the Toronto Stock Exchange, which is clearly the preeminent stock exchange. There are over 1,000 mining companies present there. $12.5 billion of mining capital was raised last year. And many of the notable diamond companies such as Lucara Diamond, Mountain Province, Star Diamonds, Pangolin Diamonds are listed there. You then have the Australian Stock Exchange, and the most notable company there who's operating in Africa is Lucapa Diamond. Then moving on to the London Stock Exchange and the AIM market, the notable stocks there are chiefly based in Africa. being Petra Diamonds, Gem Diamonds, Botswana Diamonds, and Blue Rock Diamonds. And then sadly, from a local stock exchange perspective, the Botswana Stock Exchange and the Johannesburg Stock Exchange, there are no primary diamond listings, but they do have secondary diamond listings, such as Lucara Diamond and Botswana Diamonds in Botswana. And to my knowledge, there are none actually listed on the Johannesburg Stock Exchange, notwithstanding that South Africa is an excellent destination for diamond exploration capital. This following slide here looks at capital market funding, and this re-emphasizes the point about where money comes from for exploration and development projects, with clearly the Toronto Stock Exchange leading the way, followed by the Australian Stock Exchange, which also harnesses capital from the Far East, the London Stock Exchange, Hong Kong Stock Exchange, Chile Stock Exchange, and right at the very bottom, a minimal amount of money that comes from South African investors via the Johannesburg Stock Exchange into junior companies and exploration companies in this country. So how does one discover, how does one put together a company which can actually do this kind of work, seeing all the challenges we've actually outlined to date? Very importantly are the role of mining incubators. And what mining incubators do, they bring together technical skills, financial skills, corporate skills, and an array of investors to actually launch or incubate a company. Three groups I would just like to mention, which have been very successful incubators over a number of years, are the HTI group out of Canada, the 162 group out of Dublin in Ireland, and the Lundin group, based out of Canada and Scandinavia. And these generate projects to a point where they have their own legs and they continue on their own footing once the incubation process has taken place. It's almost analogous to a child. The incubators would birth the child, would look after it and shepherd it as it goes through childhood and adolescence. And once it's kind of grown up, for want of a better word, where they have a bankable feasibility study or a mine, then the incubators let go and they become fully fledged companies in their own right. Why Southern Africa? It's a highly prospective diamond region. It has a solid track record of economic diamond production for well over 120 years. And it produces 1/3 of global diamond production. And on the other side of this, it has very limited competition. So there are great opportunities for diamond explorers in the region. However, if one looks at the Fraser Institute study published earlier this year, there is a perceived risk which continues to deter investors. However, this is a general case across the whole of Africa. Botswana is a notable exception. It's seen as the Switzerland of Africa. And interestingly and importantly, South Africa is actually catching up with it quite fast, but still has actually some way to go. If one looks at this from a purely economic perspective, and this is important because investors obviously look at prospectivity, they obviously look at political risk, but economic factors are really important. And what we did in this particular slide is we took a potential junior discovery, modeled that all the way through to production and put it into various countries in the region to see what the economic returns would be to shareholders. And interestingly, the country which develops the highest return is South Africa. And that's chiefly because when we modeled this deposit, we took a fairly low margin kimberlite, which is the kind of kimberlite that junior are likely to discover. And the 10% royalty that exists in Zimbabwe, in Botswana, and Eswatini tends to take a large amount of the money off the table before it goes back to shareholders. In South Africa, the royalty is much lower, and it's linked to profitability, which I think is a much better model, and therefore a similar size of deposit would be, from an economic perspective, much more attractive in South Africa. If one looks at the competition element, which I touched on previously, In Southern Africa, they're predominantly foreign listed companies accessing foreign listed capital, and these are typically from the UK and Canada. And aside from Alrosa's Luachi project in Angola, there are very few projects coming into the pipeline. But the real active diamond explorers in the region are Botswana Diamonds and Pangolin Diamonds in Botswana. In South Africa, from a junior perspective, it is just Botswana Diamonds, although Blue Rock Diamonds are developing the Karifle deposit near Kimberley. And in Zimbabwe, Botswana Diamonds has a partnership with Vast Resources, where we are looking to develop the Morangi field and, once conditions allow, explore elsewhere. So in conclusion, ladies and gentlemen, if I kind of bring together all of these kind of strands, the diamond supply gap is widening, despite the short-term economic hiccup with the COVID-19 pandemic. And this will continue to widen as there are no new diamond discoveries, as natural diamonds continue to be a symbol of love and of everlasting value. Southern Africa remains a highly attractive destination. It's improving on the Fraser Institute in comparison to countries such as Canada and Australia. From an economic perspective, it certainly has the ability to generate important returns. And importantly, there's very, very little competition. So those early entrants can certainly steal a march. However, there are certain things that need to be done in order to be able to improve this. Security of tenure and political certainty are absolutely fundamental to attract investors. Local incentivization is key. I've often spoken on public platforms that is there any reason why Botswana and South Africa and Zimbabwe cannot look at the same kind of scheme that Canada or Australia have? And looking at the recent initiative that's coming out of South Africa, led by the junior desk of the Minerals Council, I hope this will become a reality in the not too distant future. The emergence of new business incubators are absolutely keen, especially in the development of emerging and previously disadvantaged miners, where they do need to partner with people who have deep financial, corporate and technical experience. The role of breakthrough technology is also fundamental. If you carry on doing the same things of the past, you'll get the same result. So you need to look at innovative approaches to exploration to find those new diamond deposits, because there are those to be found, but it will only be found through the application of innovation technology. And also equally important in mining. If you want to actually commercially mine something in the Kalahari, you might have to look at something such as dredging or using the abundant water that sits at the Kalahari and bedrock interface. And then very, very importantly, particularly in South Africa, is the building of prospective investors' trust with the communities itself, with the country, to bring everybody alongside you as you move from exploration through to project and through to mining. So thank you very much indeed for your time, ladies and gentlemen. I hope you enjoyed this presentation given to the 2020 Virtual Africa Mining Summit. Sadly, I cannot ask for any questions, but I look forward to any feedback that you may have. My email address and my contact details are on the final slide. Thank you very much indeed for listening.